All right, so we are live, and we are excited because we're going to be talking about expanding into marketplaces throughout Europe. And you know, there's been a little bit of a change that's happened in Europe and the UK or something like that. Am I right in saying that? So I'm really excited to have two experts that know a lot more about this stuff than I do to talk about expanding into Europe and how that affects things and how you can make sure you're doing it the right way. So I'm excited to have Tom Meek and Cambridge Lyford from Avask Accounting as part of the Global Empire Summit. So thank you both for being here.
Thank you for having us, Kevin.
Thank you. Thanks for having us.
Yes, absolutely. Absolutely. And for those of you who are joining us, if you could do me a quick little favor and click the little thumbs up icon if you can hear us okay, because, you know, technology works until it doesn't work. So there's always that possibility that it will not work. So I want to make sure that everyone can hear us okay. So, all right. So we're going to be getting into it. So first off, I want to welcome everyone that's joining the replay. And for those of you who are live, we're getting people trickling on in. So we'll get started here in just a moment with talking about Europe. And so just real quick, Cambridge, why don't you jump in and just give a little background to why should someone even consider selling in Europe?
Well, Europe is a massive, massive place to be able to reach so many different customers with different countries, and the Amazon fulfillment network here is just so efficient. So if you're thinking of expanding to somewhere from, say, the US, the most logical place to then go is the UK and Europe. Amazon has great connection. You've got so many more customers with great internet penetration throughout Europe. It would be, in my mind, crazy not to get stuck in now, especially seeing as what we're going to be talking about later. It was a great time to jump in now and kind of test the water.
It's a good point. Whenever there's changes, there tends to be opportunities. So that's one thing that's really nice. So real quick, let's also jump in. How is it you guys are involved in the whole Europe and Vat thing? Like, where are you guys watching us from? Is this are you guys down the road from me in Florida?
No, unfortunately not. I'd love to be there. Yes, we're both based in the UK, so just the south of London. We've got a network of offices all over the world, including sort of Europe, but also the US, UAE, Australia, and the list goes on. So, but yeah, unfortunately, we're the ones that are based in the UK. It's also raining here typically, and it's actually very stormy at the moment, which is also great.
Well, don't worry. We have our own things to contend with. I actually was recording something with someone earlier, and the dogs started barking, and come to find out there was actually a rattlesnake in my backyard that the landscapers were chasing after. So we've got our own challenges in Florida. So it's not all sunshine and rainbows in Florida. I'll just say that.
I think I'll take rain over a rattlesnake any day.
Exactly. So the rain's not so bad. So all right. So let's talk a little bit about the opportunity. So we talked about how there's some changes here, and I definitely agree. Whenever there's changes, there's opportunity. And in my own business, I came to find that a lot of the changes Amazon made in the US, the changes were not anywhere near as drastic, and the effects of those changes were nowhere as drastic in the UK and the rest of Europe. And so let's talk a little bit about, we talked about the opportunities and whatnot. Now, one of the things people have traditionally done is being able to sell to other European marketplaces from the UK. Can you still do that as of today?
At the moment, yes, you can still use that process of shipping into the UK and using that as your fulfillment hub for Europe. That's not going to change until the end of this year. And then obviously from the 1st of January 2021 onwards, we are going to start seeing those changes. So for the moment, there's no need to really panic. You can continue shipping into the UK and using that as your hub. Tom, do you have any other comments regarding that?
No, I think when you look at it, Europe and the UK, yes, there's some changes I know we're going to come on to later on, but I think that in terms of using the UK as a hub, that's still very much a very easy option, especially for sort of customs clearance and, you know, certainly looking at that VAT element of being able to get your goods in and trade under those distance selling thresholds, which hopefully some people are familiar with already. So yeah, yes, you can still use the UK as a hub, but it's time to start thinking about alternatives as well.
Yes, definitely. So, all right. So one thing I just want to bring up here real quick is if you're watching this and you have questions, you have two people that know a lot about VAT and getting expanded into Europe and the compliance part of that. And so all the little boxes you got to check off. So now is definitely the time to get those questions answered. Whether you're just getting started or you're to a point where, you're growing in Europe and you're trying to find, where's that next place to go. Avask is definitely able to help you with all of that. So feel free to leave a comment down below and we will feature that question and do our best to get it answered. And if you're watching the replay, you can leave a comment as well and we'll get to those. So while that's coming up, what does it take to get started in Europe? Because let's take a step back here. A lot of times people are looking to diversify their revenue off of Amazon in the US, which is great. Amazon in the US is still an amazing platform. But, all the changes that have been made recently show you really got to make changes. So, some people are deciding, should I sell in eBay and Etsy and figure out my own Shopify store, or should I go into Europe? But I've come to find in my own business and with a lot of people I've worked with, going into Europe, even just the UK, you're oftentimes going to beat out your sales that you would get on Walmart in the US, for example, in a lot of cases. So there's definitely a lot of opportunity there. So in order to do that, we just send our goods over there and everything's good, or there are some forms, boxes, things of that nature for compliantly to get our stuff over there.
The registration process is the first hurdle that you've got to obviously get across, because it's vital that where you start to bring your goods into, that you are VAT registered, because holding stock in a jurisdiction is where you first trigger your VAT liability. Tom, do you want to speak more on the registration process in these countries?
Yeah, can everyone hear me okay?
It's a little hard to hear, but we'll fill in the blanks where needed. But that's okay.
Might be best you guys crack on. I just need to try and sort this out quickly.
Okay. Well, we will welcome you back with open arms when the audio stuff got figured out. So that's the thing, guys. This is live. So anyway, let's just chat real quick with.
I can see a questions come in regarding where to get VAT registered. So the first point of triggering your VAT registration is where you're holding stock, as I mentioned. So if you're planning on expanding into Europe, wherever you bring that good over a customs border at the moment, obviously things do change soon, you will have to then have a VAT registration number. That will need to be applied for before you bring your goods in, to make sure that you're fully compliant from the offset. The other time where you can trigger a VAT liability is when you've breached a distance selling threshold. At the moment, they currently stand at between 35,000 euros and 100,000 euros, depending on which country it's relating to. And once you've triggered that, you're then due to register in the VAT country of arrival and declare your sales in that country. If you don't do so, then you will be deemed non-compliant in that country, because you would have seen to be evading your tax obligations. So it's really important to monitor your distance selling thresholds, or appoint an agent such as Avask to monitor them for you, so that we can make sure that we get those registrations in before the necessary point of registration.
Great. Now, one thing I just want to point out real quick is that for a lot of people, they might not be used to some of the terminology. In the UK is a little different than it is in the US. Terms like liability, terms like, compliance would be one of them, but also there's just distance selling threshold. And then for some people, like, what is VAT? So do you mind just explaining what is VAT and how is it different than like sales tax in the US to the best of your understanding of US sales tax?
Of course. So VAT is value added tax, and essentially what it is companies charge this additional percentage to their customer as a way of indirectly collecting tax on behalf of the tax officers. So depending on which country you're talking about, for the UK, it's currently 20% VAT. This will be added in to the costs that you charge to your customer. Obviously, in the US, it's slightly different, where your taxes get added on once you go to the till. Whereas on, say, Amazon here, the VAT is included in the price, and then the company that has collected the funds is due to remit that to the relevant tax office as per the taxable jurisdiction.
Okay. That all sounds very eloquent. And one question I think some people might have listening to that is, oh, so Amazon, so is that like in the US, there's a marketplace facilitator and I don't have to worry about it because Amazon just takes care of it for me? Because that's what happens here and I'm used to it.
Yeah, at the moment, that's not how it works here. So companies do have to, in their pricing structure, include the VAT percentage. So that's why it can get slightly tricky for customers, clients that are moving from the US to European states to kind of get their heads around working out their margins, etc. But it's really important to include the relevant percentage of VAT in what you're charging. Otherwise, you're going to be losing out on some of your margin.
Gotcha. So just to make sure I understand, so in the US, somebody goes to the till, as we would say, the cash register, or, add to cart, so to speak, on Amazon. And when we go to check out, we would be charged the sales tax on top of the selling price. So if our cart, our basket is $100, if the sales tax is 7%, we're going to pay $107. So if I go to purchase something in the UK as a customer and my cart, my basket is 100 pounds, am I going to be added on VAT? Or just to make sure I'm perfectly clear on this, is it included in my price customarily?
Yeah, so the price that you see when you go to check out on Amazon is the funds that would be collected by the company that you purchase from. So that's why it's so important to include that. Otherwise, you will be losing out on, for example, 20% of the amount that you've charged, which is a lot for some sellers that are working on small margins anyway.
Got it. Tom, looks like you had something you wanted to add. Welcome back.
Yeah. Hopefully you guys can hear me now. You think after COVID and the amount of Zoom calls and things I've done, I'd be able to work this out by now, but clearly not.
No worries. We're glad to have you back.
But anyway, just to add to that, I think that when you compare sort of the US and the sales tax system with VAT, I think a lot of US sellers that I actually speak to are quite like, oh my goodness, VAT is so confusing. But try the other way around. Honestly, I can't tell you how much more simple VAT is compared to sales tax. I mean, I do sales tax as well. I understand obviously what the requirements are, and you guys have got like 45 states that actually require some sort of sales tax. When you look at Europe, especially on Amazon, you've got those 7 countries more or less that that you need to really worry about, I would say, and that's when you're going maximum exposure, so to say, in the EU. So it is much more simple than you may think on the face of it. As Cambridge was saying, the VAT is added already when you're going through. So make sure not to trip up on that, because we do see people doing that sometimes, and it's nothing worse than telling people, well, actually, you should have been collecting that tax. But ultimately, the fundamentals are very similar, and there's still those thresholds in place, similar to the US on that economic nexus side, similar to the distance selling side on throughout Europe.
Gotcha. So if I was to look and see that like something is selling in the US for about $20 and it's selling for about 20 pounds in Europe, it's not the same thing, because one, the currency is different. So that might be the equivalent of $25 US, to use apples to apples. And then at the same time too, it's including the VAT. So as I'm trying to figure it out, it's not like I can just say, oh, I'm going to price myself really competitively unless I'm factoring in that VAT, right?
Yeah, exactly that. So be mindful of that. And it always comes down to, doing your research before you expand to a market. I think there's a lot of people that, yes, it's fine to dip your toe in a new market like the UK or EU generally. But I would say that it's always worth going in full guns blazing and going in with 2 feet, so to say, making sure that you've done all your research, making sure that you understand the pricing, that your competitors out there, and also that tax element is, it is not what everyone wants to be spending their time on, but use the resources around you, someone like ourselves, to be able to advise and sort of forecast what that looks like for you.
Gotcha. That's a good point. And I want to go back to what you said earlier about every state is a little bit different. Every jurisdiction is a little bit different. So a lot of sellers don't know the pain of having to fill out a form to file their sales tax in the state of Texas, for example. So in the state of Texas, you have to put every jurisdiction that applies. So for example, Amazon will just give you a report with your sales and where they're at. You have to figure out what jurisdiction is. So if, for example, somebody living in Houston, you might have a portion of that tax for that transaction might go to Harris County, the county Houston is in, the city of Houston, Houston ISD, which is the school system, and maybe even the bus system. So, and there might be even a special thing on top of that. So it might go 4 or 5 places that's going. And that's just for one transaction in Houston. And then you got somebody in Lubbock County, and then someone else is in Dallas, someone else is in Richardson, someone else is somewhere else in Texas, and you got all these things. And then now every state has got a little bit different system and when it's due and all that. So how often do we have to file in Europe? Or let's say at least the UK. We'll keep it to the UK for now. We'll expand beyond there here in a moment.
Yeah, of course. The UK is filed on a quarterly basis, and it's a lot easier than how you've just explained it in the US. It's all of your sales accumulated together, and you're paying one tax office. So you just calculate the VAT based on your gross selling price. Obviously, we can factor in things like import VAT and stuff that you pay, but it's one return to one tax office, so you don't have to worry about where you are having to pay different branches or anything like that. It's much more consolidated into one piece of paper.
Gotcha. Now, so one question I have. Oh, got a little bit of an echo there. So one question I have is, if I heard I have to pay VAT at the border. So I'm paying all this VAT. I'm paying VAT at the border. I'm paying VAT to the government on basically the equivalent of, as I understand my back of the envelope math, 1/6 of my sales. So there's all this VAT. I'm just paying all of it, right? It's just pay.
So the import VAT that you pay on entry can be reclaimed in your VAT return if you're on the standard rate scheme in the UK. The same applies for Europe. If you pay import VAT at the border, you can reclaim that in your relevant VAT returns. Obviously, that's why you need to be VAT registered. So it's not as if you're completely out of pocket twice over, and VAT shouldn't eat into your margins anyway. So it should just be that additional that you account for. So whilst it might seem that you're paying an awful lot, it shouldn't then affect your figure once you see the end result.
Yes. So one thing that's very different than the US is in the US, when you pay, whatever you pay at the border, the tariffs, you just pay that. And there's no credits for that. But you're saying in Europe, there's a credit system basically for what you're paying in along the way for those goods. Is that the value added part, as I'm understanding it?
It's just allowing, obviously they have to charge these relevant taxes when you come into the country, but then it just allows the trader to then offset their VAT liability. So again, it just means that you're not paying the VAT twice, because if you bought these goods in and didn't end up selling them, they'd obviously still expect some element of VAT to be declared to the tax office because you bought goods into a jurisdiction. But then obviously you can reclaim. There's only one exception in terms of being on the flat rate scheme in the UK, but that's designed for very small traders anyway, so that shouldn't really impact their margin too much.
Well, let's talk about that. So then there's different options, because you used the word scheme, and the last time I heard the word scheme, it was Bernie Madoff, and he went to jail. So if I'm on a scheme, am the British authorities, are they going to arrest me?
No, Tom, do you want to jump in here? I feel like I've done a lot of talking, so you're good at this.
Yeah, so I mean, when you look at expanding to the UK and solely the UK, unfortunately, there's no other sort of set scheme similar to this throughout Europe. But with the UK, they've blessed everyone with 2 schemes that are available. So one scheme, as Cambridge just mentioned, is the standard rate scheme. Now, the standard rate scheme is that standard 20% VAT. Okay, so if you sort of look at the advantages and disadvantages of each scheme, which I'll explain as we go. On the standard VAT rate, you'll be able to reclaim your import VAT. Okay, so whatever your cost of value of goods as they import, that 20% element will be reclaimable against the sales VAT that you pay to the customer, so on the end sale. So obviously, once those counteract each other, you're left with that figure, which is due to the tax office, which is obviously what will be paid to the tax office, depending on what that amount may be. So advantage of the standard rate is that import VAT is reclaimable. Okay, that's the main aspect to get out of that. Now, on the other hand, there is what's called the flat rate scheme. Now, there are certain eligibility criteria as to if you're actually able to get onto the flat rate scheme, such as you have to be turning over under 150,000 to actually be able to go onto the flat rate scheme. Now, what the flat rate scheme is basically a lower percentage of sales VAT that you pay. Okay, so you still have to pay that import VAT. Unfortunately, on the flat rate scheme, that's not reclaimable. Okay, so you're going to lose out on the import VAT. But the sales VAT in year 1 is 6.5%, and in year 2 it's 7.5%. Okay, so it's quite a large saving on the sales VAT side. Now, you're probably thinking, well, how do I work out which one's best? And really, you've got to go away and do your own math as to which one's better. But generally speaking, if you're selling very lightweight products, things like iPhone cases are using as an example, the cost of value of goods, that percentage that you're going to be paying on import, because of the cost of insurances, the cost of manufacture, the cost of shipping is normally going to be quite low, then your import VAT will be also quite small. Therefore, it's a lesser amount to be able to reclaim. So if you flip it on its head and look at a very heavy item, very high value, then that import VAT is going to be much more important to reclaim. So again, very brushed over way of looking at the two schemes that are available. But what you've got to do is calculate whether the flat rate scheme and the sales VAT saving is better than being able to reclaim your import VAT. And we can help you do that.
Awesome. So just to make sure I understand, so a scheme is essentially just a methodology, as we might use for the term for accounting in the UK. Am I right?
Yeah, it's not a negative thing at all, because you're on a scheme. It doesn't mean that that they're going to be knocking on your door or anything. It's given the traders two options depending on their size, so that they can account for their VAT accordingly, and it's a way of opening it up to make sure that more people are VAT compliant.
Yeah, exactly. And that's a good thing, is to be VAT compliant. Now, one of the things I've also come to find is in my own experience, I'm on the flat rate scheme, and I found for a lot of people, it's beneficial to be on the flat rate scheme. And a lot of the clients I've worked with in my Done For You service, where I help people expand into countries like the UK, is oftentimes, even if it's on the edge of whether the numbers work out for them to be on the flat rate scheme, or sorry, whether reclaiming import VAT versus being in the flat rate scheme, oftentimes they end up going with flat rate scheme just because of the simplicity. Because there are certain forms you have to have. So like, if I just kept my UPS invoices for import VAT, does that count, or do I need a certain form from the government?
So for import VAT, you do have to have a C79 certificate in order to reclaim it. And that comes directly from one of the departments at Hmrc. So that when you're going to reclaim your import VAT, it's really vital that your freight forwarder shipping company declares your shipment correctly under the correct EORI number. There have been cases where some shipments have been kind of declared in a bulk under the freight forwarder or shipping company's EORI number. And then that means that the trader cannot reclaim that import VAT, because in the eyes of Hmrc, it's not been declared under their entity. So it's really important that they trigger the declaring with the EORI number, because then that's the only way that the C79 certificate gets triggered.
Yeah, I'm glad you brought that up, because that's something I think happens fairly frequently, is that, especially, I don't want to mention any particular countries where stuff may be imported from, where it seems like that happens a lot, where essentially that whoever's putting it under their EORI number, which is like basically the importation number, like if somebody's familiar with Canada, it's like the non-resident importer number, basically. And that number now allows them to get credit for what you just paid for VAT, because at the end of the day, there's no free lunch. So they're probably passing it along to you. And sometimes you even still get the bill for the VAT, but they're getting the credit. So the C79 form is actually probably one of the prettiest forms you'll ever get from a government entity. It's on really nice, crisp paper. But one of the things I've come to find is, especially with COVID now, it might take 2-3 months for you to get it. So sometimes it's easier to start on the flat rate scheme, and then you can figure out some of those logistics with your freight forwarder and things of that nature. So, let's talk a little bit about, okay, we import goods into the UK. As of today, which will help us for the conversation for expanding beyond December 31st, which we'll get to why that's an important date here in a moment. But so as we're expanding into the UK, and maybe we want to start selling in Germany. So now I've created my listings, and I've translated them. So I've got them in Germany. I've got PPC running in Germany, because I heard as of today, we could do the European Fulfillment Network and send goods from our stock in the UK to customers in Germany. But Amazon has a box of where we can store goods. So what if I just check the box to store it in Germany? What would happen there? I think I understand, because you alluded to that earlier, but I just want to make sure I get it.
Yeah, of course. So if you then store your goods in Germany, you have to be VAT registered in Germany. But at the moment, the EFN network is still working, so you can still ship directly from the UK to your end customer in Germany.
Gotcha. And one of the things I've kind of come to learn, and feel free to jump in and correct me if I'm wrong. And again, just a little quick plug, feel free if you have any questions. We are live and we will answer your questions. We'll prop them up on the screen. And you've got two experts who can answer them a lot more eloquently than I can. And they know their stuff. So feel free to leave any questions or comments you have in the chat, and we'll do our best to bring them up. Now, one thing I do just want to say real quick is where was I starting to go with that? I think I just lost my train of thought. With going into other marketplaces, there was a distance selling threshold you mentioned. Because you can go into other marketplaces and sell from your UK stock. Now, one thing that's also different from UK versus US is US sales tax is, generally speaking, destination based, where the customer lives. In the UK, it's more, and I know I'm oversimplifying it here, but especially when you're first starting out and you don't have huge numbers in all the marketplaces, it's generally more dispatch based, meaning where it's shipped from and where you are storing your inventory. Am I correct?
That's correct. So the standard accounting method is to tax on the location of departure of the good. There is a converse method, and I'm sure some of you are aware of it. It's opting to tax on arrival. So for that, you do need a VAT number in the arrival country. So that's the only kind of catch there. But it does mean you then tax your goods into wherever they're headed. So
okay.
That can work out quite advantageously if the arrival country has a lower VAT rate for certain items. So, for example, in the UK, things such as supplements are standard rated for the most part. And then if you were to tax such items, say in Germany, for particular items, you can then benefit from a lower, from the reduced VAT rate. So 7% or 5% as it is at the moment. So that could work out quite advantageously for strategic selling, and then obviously you can then price much more competitively if you're accounting for a lower percentage of VAT in your selling price.
Or if the market allows, you can keep more money in your pocket too, right?
That's true. That you could do that as well.
You've got options there, which is a good thing. So, so let's talk a little bit about this distance selling thing. So, because for the most part, folks don't do the destination based or arrival based, as you mentioned. They do it more based on where it's just the standard accounting procedure where it's coming from. So as it stands today, what is that threshold if I was to sell into Germany from the UK?
So presently it stands at 100,000 euros.
Okay, so that means I can sell 100,000 euros worth of products to Germany customers from my UK stock.
Yes, so you can sell anything as soon as it goes even a penny above that. That's when you have to start taxing it in arrival and get that VAT registered. So that's why I mentioned earlier that it's really important to monitor the distance selling thresholds. And as I said, they do vary. For example, France is 35,000 euros. So there's quite a disparity in that, but that's why it's important to monitor these things.
Yeah, for a lot of people, they would most likely probably hit the distance selling threshold of 100,000 euros in Germany before they would hit it in 35,000 in France. So it's one of those things to make sure you're paying attention and don't just let it get in front of you or don't lose sight of that. Maybe was the right way to phrase that. So
Germany is such a large market as well. So
yep.
if your product is really flying off the shelves, you'll find that you hit that threshold way quicker than what you thought you would have done. So that's why obviously getting a tax advisor that can look at that for you is really important, because the application process, which I'm sure Tom can mention more than I can, at the moment it's taking quite a while to get VAT registered. Isn't that correct, Tom?
Yeah, sorry guys, dropping in and out on the signal side. I don't know what's going on. It's probably the rubbish weather here in the UK. It always is. It's easy to blame anyway. So
there you go.
I mean, in terms of the registrations across Europe, now they all vary, to be completely honest. But I mean, with Germany being sort of the most problematic, and especially with sort of the slight backlog that we've seen from COVID, I would say that realistically you're going to be looking at a minimum of 2 to 3 months to actually register for VAT in Germany. And we've seen some cases taking even longer, and that's not just due to the backlog. I think the tax office in all of the different countries are tightening up the requirements to make sure that people are compliant. So yes, it's a great opportunity to expand into the EU, and it should be done it should be done properly. And it's becoming much harder to be non-compliant in the EU, which is why it's so important to get it right from the start.
Gotcha. Good point there. So I heard from my friend, I'm using a hypothetical person here. I heard from my friend that they kept asking for all these forms and stuff. Like, what are they trying to get at? Like, why do they want all this stuff from me to register? Let's say in the UK, for example.
Yeah, I mean, there's a whole host of reasons. I mean, obviously, there's a huge VAT gap that from sort of sellers over the years that have been non-compliant. In terms of the UK, obviously they've been increasing the amount of documentation required to make sure that they can close that gap as quickly as possible. And also with everything that's going on with Brexit and requirements there, it's much more important that we understand, who is registering, who's going to be importing goods there, so we can make sure that that's that transition from one country to another, especially with all of these different sort of FBA solutions that are around, to make sure that everything can be tracked and stayed on top of.
Gotcha. So is it fair to say what they're trying to figure out is that you are a real person who's not trying to like fraud the government for like suddenly doing a bunch of returns for money paid in to get refunds and then run away, and then also to make sure that you truly are going to sell within the next 30 days? Is that kind of along the what they're trying to look for?
Absolutely. There's that element to it as well. It's making sure that people are who they say they are, and making sure that everyone that's registering has a proper reason to register. So sort of one of the most recent and most common requirements is sort of showing that shipping proof of shipping or intention to ship, and even sort of confirmation from marketplaces such as Amazon confirming sort of that they plan to do that isn't sufficient. They want to see sort of written confirmation from your shipping provider saying that that there is an import due to be sent out on this date, for example. So there are other sort of loopholes around that we can help sellers to do if they're not ready to have or be at that stage. So I wouldn't worry too much, but again, reach out to us, reach out to a shipping provider, and make sure that you've got all of that sorted before you go.
Okay, good deal. So really what they're trying to do is just make sure that you are a legit person who has a legit business interest of going into the UK. And I'm assuming probably the other countries are probably similar to that too.
Yeah,
with their own flavors.
Yeah, absolutely. There's obviously a lot of new legislation that's come into play. I'm sure a lot of people that are listening today are aware of sort of the requirements, certainly in Germany and France. We did a webinar last week about the French Anti-Fraud Act and also the JSL requirements in Germany. And ultimately, without going into too much detail on the specifics, but what they're all trying to do is understand, who is due to be paying what VAT where. Because as I said, there's such a massive gap of what is due and what's being paid for VAT in the EU that they're really looking to close in on that. Cambridge, I'm sure you've probably got something to add on that side.
But it's just, I think tax officers are becoming increasingly more cautious when it comes to online sellers and in making sure that they are staying in line with their tax obligations. I think, especially with HMRC, they kind of let loads of people register at any one time, or even register post the point that they should have. And that's why they set up their particular team that kind of audits e-commerce accounts to make sure that they've been compliant since the start. So tax officers are really getting wise to sales that should have been declared. And then they're trying to close, as Tom mentioned, this VAT gap that we have at the moment.
Now, help me understand real quick. What is HMRC? Help the viewers know, what is that? What does it stand for?
Revenue and Customs. So it's basically the tax hub of the UK. So any money that needs to be paid will be paid to HMRC. There's various different departments. So communicating with them is not the simplest of things. I'm sure some of you guys are very well aware of. But for our instance, obviously we just deal with the VAT side of things, and the compliance audits, which is what I mentioned that they're opening quite a lot of. And then your freight company will deal with more of the customs entry side of things. So it's one big organization that deals with everything tax and import related.
Yeah.
Well, the nice thing about that is one thing I just want to say, I always have loved the Her Majesties as the beginning of the department, and going back to the simplicity versus the US sometimes, because sometimes we overcomplicate it in our head of like, oh, it's different, it's so hard. But just what you just said there, that's probably about several different departments in the US. There would be the IRS, there would be Department of Revenue in every single state, probably some county tax office, Department of Homeland Security, whoever handles tariffs. There's probably multiple others. There's a whole bunch of different departments, whereas we were talking about one at HMRC. So real quick, do you have a comment? So this one's coming to us from YouTube. So very interesting information. Well done, guys. Thank you. I'm glad that you are enjoying this. And so everyone else, as you're watching this, feel free to drop a comment down below. Assuming it's down below where you're looking, but generally speaking, wherever the comment section is, YouTube, Facebook, wherever, and you can get your questions answered by two experts who really know their stuff when it comes to this stuff. Because correct me if I'm wrong, this is not just a side hobby. You guys do this all day long, right?
It's becoming my life increasingly more every day. The hours are never 9 to 5:30. It's always different time zones and everything. So it takes over. It really does.
Nice. Well, one thing I just want to kind of reiterate on that point is the fact that you're talking about it's getting busier and the tax offices are getting a little bit behind. And we had alluded to the fact that there is a December 31st cutoff. So help everybody understand, what's this big December 31st cutoff and how does that potentially impact them and all the strategies we just talked about?
Of course. So from December 31st at midnight between those day and the 1st, Amazon is ceasing to move goods between the UK and Europe because of Brexit. So that's when Brexit is completely finalised.
And that's British time, not Pacific time, right?
It's European time, ironically.
Right.
From that point, they will stop all the movements of goods, which does mean that obviously people that traditionally ship into the UK and use that, as we mentioned, as their fulfillment hub, are now having to look for other strategies of getting their goods into Europe, because you don't want to isolate one of the markets from each other. So vice versa, if you traditionally ship into Europe and use that as your hub, any one given country, then you're going to want to look to embrace the UK as well. So we're seeing tax offices getting increasing amount of applications for VAT numbers, and we are here, as well as EORI numbers, just to make sure that post that date they don't have this cut off in their shipment where they can't get stock into either one of the locations.
Now, this is, I forget if you mentioned this, but does this have anything to do with Brexit? Because I thought that was like 4 years ago.
Yeah, so it's been going on for what feels like a lifetime at this point. So 31st of December, there's no extension beyond that. The UK is out of the European Union. We're still there's still opportunity, might be last minute deals with Europe, but at the moment the landscape is looking a little bit bleak in that sense. So we're assuming that the UK is going to become some kind of jurisdiction much like the US is to the UK. So a distinct difference.
Got it. So one way that I think a lot of, especially Americans watching this, might be able to understand is, so I grew up in Texas. And in Texas, in 4th grade and 7th grade, you take Texas history, which is really indoctrination into Texas is the greatest state in the history of everything. And one of the things they drill into your head is that Texas is the only state that can secede from the union legally. I don't know if that's 100% true, and there's probably people that would argue with that statement, but let's just go with it that's what I was taught is accurate. So if right now goods can move around the United States. So if Amazon has a warehouse in Dallas, Texas, they can move stuff to Kansas, and it's no big deal because it's all within the US. So as of today, I know there's the distance selling and the holding, and like things are a little different there in the US, but is it almost kind of like moving stuff from the UK to France is almost like moving stuff in a very simplistic manner? Is it kind of like moving stuff from the UK to, or sorry, from the UK to France is kind of like going from Texas to Florida?
Yeah, at the moment there's free movement of goods. So all that needs to be completed is your intrastat declarations, which are your declarations of the movements of goods between one taxable jurisdiction and the other. And that's a relatively simple document to complete. You just have to show the quantity of items shipped between jurisdictions at any one given time, in accordance with the filing period that's required. That when you usually file your VAT return, you'll submit a supplementary document of your intrastat. Obviously in the UK, you include your acquisitions and your dispatches in your UK VAT return. So that's one document as opposed to two. But once obviously Brexit does occur, Amazon stop those movements for that reason, there's going to be that element of getting your stock from the UK to Europe will not be as easy.
Gotcha. So does that mean if I have a customer on January 3rd in Amazon.de, Germany, and they want to purchase my goods, which are being stored in Amazon.co.uk, or let's just say in a UK fulfillment center, does that mean Amazon can't ship it now?
So there'll be opportunities for shipping, but obviously until we know 100% whether they're going to be customs relations that are favourable to the UK between Europe and the UK, there might then be additional costs on getting it into mainland Europe, which is seeming increasingly likely. I would hope that these are bought in on quite a staged basis. At the moment, it does look like things are going to be bought in more on a staged basis, as opposed to, January 1st, we're going to start imposing crazy costs on movements. But the shipping's not going to be as easy as, your traditional FBA at the moment.
Gotcha. So there may be some complications, as I'm understanding it, of like, for example, if a customer in Canada bought something on Amazon.com, it's not as simple as just, they get 2-day shipping because it's going across a border to a different country. Even though we love Canadians, we think of Canadians almost like, part of the family in the US, but there is a border. And so there's a difference. And so it would become a border. And just right now, there's uncertainty of what that looks like, right?
Exactly. But I wouldn't let anything like that put anyone off, because there's always opportunities of storing stuff in Europe, which is because Amazon have got so many fulfillment centers, it's a relatively easy thing to set up as long as you're then VAT compliant in the two countries that you choose, the UK and then whichever other one you choose as your hub. Make sure that you're VAT compliant. And splitting your inventory now is really important, because you can start building up stores of stock in both the UK and Europe, where should that date arise and you do have a shipping complication for some unknown reason, you've got that store of goods there that can feed for a couple of months whilst you then work out your shipping scenario, say if your EORI number didn't quite come live at the time you wanted because of a backlog with the tax office.
Okay. So here's a question. So there was a famous scene in the movie Coming to America with Eddie Murphy, circa 1988, where he was deciding, he was the king of fictional Zamunda, or the prince of Zamunda, and he was trying to decide where to go in the US. So he takes a globe, spins it, and he lands on Queens, next to New York. And so if I want to figure out, besides the UK, where I want to register, do I just flip a thing and come on Spain? Hey, Spain it is. or there's some strategies, they're not all quite the same?
I would say I would recommend talking to your freight forwarder or shipping company as to where the most cost-effective place for you to import into is, because obviously that does play a big part with splitting your inventory. You've then got to pay costs twice over to getting into these two jurisdictions. So that would be my comment. Tom, do you have anything to add to that?
Sorry, I keep going in and out here, so I'm staying a little quieter than normal. So we're talking obviously regarding importing into which country and picking which country might be best, to be saying. So
right. So like after UK, like what might be my next country I want to import into, just in case it's total cut off at the border on December 31st, and I don't want to lose my sales in Germany and Italy, for example.
Yeah, I think obviously just to mirror what Cambridge said earlier, most people would naturally pick their biggest marketplace in the EU, which is typically Germany, then France, for obvious reasons. I think when you look at, well, where do you actually want your products placed? Well, you want them closest to your buyers, where the most popular marketplace is, so that you get that prime benefit. So that's really, really important to firstly take into consideration. But in terms of sort of port of entries, a lot of people are looking at the Netherlands as another very easy entry point into the EU, and which is very similar to the UK in terms of the requirements there. So that's been a lot of that's been the go-to for a lot of sellers, but as Cambridge said, you're going to want to speak to your freight forwarder just to check exactly, which other countries and markets are going to be best for you as an individual. And that can really depend on even to the product range that you're selling, the VAT rates and all sorts. So yeah, definitely speak to your freight forwarder as well.
Awesome. Now, one other question I have is for those that are growing and they've got a lot of sales and whatnot. And so, they're on the fence of, do European fulfillment network, or what we've heard of as pan-European. So maybe they're registered in Germany now, and, they're in a couple other places, but they heard that they also got to register in, all of a sudden they got to register in crazy places like the Czech Republic and Poland. Why is that?
Yeah, this is one that's always fun to explain to sellers because there's just to sort of take a step back. I mean, when you look at expanding into the EU, certainly prior to Brexit and the requirements there, but you had a number of different options for Amazon FBA that made it very easy for you to source or really trigger tax requirements, I should say. So if you look at firstly what triggers a tax requirement in Europe, then you've got two main reasons. So the first reason is that you physically got your items stored there, so inventory stored, or you've reached a distance selling threshold, which is, as we talked about earlier, when you trade from one country into another. And as soon as you trade over that threshold, you then need to register for VAT. So in terms of looking at the different FBA programs, now why it's important to work out what triggers a tax liability is because when you look at those three programs that you've got, which is EFN, MCI and Pan-EU, but if I just focus on EFN and Pan-EU because they're the most common, EFN stands for the European Fulfillment Network, and that is what 99.9% of people start with when they expand to Europe. And what that means is that when you're on the EFN network, which is an FBA solution, Fulfillment by Amazon solution, it means that you're just going to store your products just in one country. Now, when you store your products in one country and you're able to then register for tax in that one country, that's all great. The UK, for an example, you're filing on a quarterly basis. It's very, very simple. Kevin, as you say, you've got the advantages of looking at that flat rate, standard rate, and the different schemes that are there.
And you don't go to jail because you're on a scheme.
Exactly. You don't go to jail for it as well. So that's definitely worth looking into. Now, the great thing about EFN is that you can still trade from one country into another. Now, let's look at Germany, for example. If I was a seller approaching Europe today and I thought, do you know what, I'm going to dip my toe in the water. From a compliance point of view, I don't want to spend thousands of pounds a year on making sure that I am fully compliant, and I don't want to get maximum exposure yet because I don't know where my products are going to sell best. I would say perhaps register in Germany or register in France, one of those two main markets. Send your inventory there, get the EORI so you can clear your goods at customs, have your products stored there. And then what you're going to be able to do is trade under the distance selling thresholds. Obviously, each country has its own distance selling threshold, and you're going to be able to then work out where your products sell well, where they don't sell well, where it's very competitive, make use of the holiday seasons. So you really get a lot of visibility from very little compliance from the VAT tax point of view. Okay, so that's a really good way of easing in. And over to what you just mentioned there, Kevin, which is the Pan EU. Now, the Pan EU is like if you're going to be working, you want to try and get somewhere in Europe on Amazon, it's the Pan European program. Okay, so what is Pan EU? Pan EU is a fulfillment option in your Seller Central that when you tick the box, suddenly Amazon are then going to distribute your items across all of the different markets. Now, we've mentioned the 5 marketplaces. You've got UK, Germany, France, Italy, Spain, but you've also got these 2 other countries, which I always have to explain to people because it's always great fun. And they're like, I don't want to register in Poland and Czech Republic. Why would I
There's
register there?
Amazon.pl.
You know, and Amazon.pl, I've never seen that before. My products in Poland and Czech Republic, what's going on? So, yes, in answer to your question, they are in Poland and Czech Republic, okay? Because what you do when you trigger Pan EU, Amazon take your inventory in Germany and wherever it might be, where it's started, and then they're going to work out where your products sell best in terms of their algorithm and working out where your customer demand is. And then they're going to press the button and suddenly all of your inventory is then slowly going to circulate across these 7 countries. Now, obviously with Brexit, there's differences with that. So it's the 6. But ultimately, Poland and Czech Republic are not marketplaces. They are purely there for fulfillment only. Okay. And that's an advantage because it's much cheaper to fulfill from those countries. And there's also other advantages as well in terms of setting prime eligibility in neighboring countries to Poland and Czech as well. So it opens up your network, it's cheaper fulfillment, and ultimately it's part of Pan EU, and you're going to be storing there whether you like it or not. So you need to register for VAT.
Gotcha. So basically what you're telling Amazon is you could do the same thing you're doing in the US of taking, like if I send stuff to Charlotte, North Carolina, you're going to move some to Texas, some to Michigan, some to California, wherever you feel in your algorithm, Amazon, you want to get close to the customer, you're going to do that. So basically that's what the European equivalent is. And there we have to now file in all those countries because we're storing in those countries, right? So
exactly that.
What's the advantage to doing that? Like, is there lower fees with Amazon or anything like that?
Of course. Yeah, of course. So obviously the whole idea of the Pan EU is to bring your products closer to your buyers. Okay. Now everyone loves Prime. There's over 150 million Prime subscribers, which is just growing and growing, which is unbelievable. Now, obviously, in terms of going from the European fulfillment network to EFN to Pan EU, as you say, why would someone want to do that? All you're doing is triggering additional VAT requirements. Well, the reason you want to do it, as I said, is to bring your products closer to your buyers and become Prime eligible in each market. So a lot of people might typically say to me, "Oh, Tom, I don't want to register in Italy or Spain because I don't really sell very much from there." And I said, well, your products are in the UK. You're not Prime eligible in those marketplaces. And it makes a massive difference, a huge difference. And actually, statistically, Amazon did a random survey of a selection of sellers. And they said, well, actually, when you go from EFN to Pan EU, sellers can expect to see approximately a 30 to 40% increase in turnover. And that's purely on the basis that your products are going to be closer to your buyers. So you get the Prime eligibility. Now, that's not the only advantage. You also pay cross-border fees when you trade on the EFN network, when you go from one country to another. So to put it in simplistic terms, if I'm trading from Germany into Spain on one item sold, there will be an additional fee that I have to pay through FBA that they'll take off me if my product is departing from another country, so cross-border. Now, if you're on Pan EU, your products are already in each of these countries. Okay. So because of that, you only pay the local fulfillment fee. Okay. So not only are you hopefully going to boost your sales massively, you're also going to be benefiting from the local fulfillment fees on each sale made.
Yeah, that's probably, I think, the best part of it there, because it almost is like if, let's say, going back to the US as an example, if Amazon was sending something from North Carolina to South Carolina and they charged you extra because it was leaving the state of North Carolina. And so it would be as if, let's say, you now had sales tax liabilities in all those countries and you had to pay extra. So really what it comes down to is, at a certain point, does your savings of the fulfillment fees, which used to only be about €1 per fulfillment fee if it was going across the border, they've made it, they've tilted it. So if someone hasn't looked at it in a while, it's probably worth looking into, just to check that, to see what your sales are. You know, even if your sales don't increase, even if just that alone is a saving, it's probably worth looking into. You know, and then you could always talk to someone to see if, you know, it's made sense there, because that's the weird thing about, as much as there's free movement of goods, it does trigger VAT liabilities if you're storing in those countries. So that is the thing that's different than the States, but the math could work out in your favor. So I'm always a believer of talk to the experts to figure out, are you crossing a threshold where now it's not just you need to register in a bunch more places, or it would actually be advantageous for you to register in a bunch of places, which could be the case here.
Yeah, sorry, just very quickly to add to that, I think what you got to bear in mind as well is that the natural progression of a seller is to end up on Panny U, obviously for those reasons that we've mentioned just there. But you know, with the distance selling thresholds in place, there's only so many sales you can make before you start triggering additional requirements. So although they could be quite high, Germany 100,000, 35,000 in France, 35,000 in Italy, and so on, you've got quite a buffer there to get started. But you know, if you really want to accelerate in each market and have those savings, then Panny U is definitely going to be your best option, so that you can, you know, deliver quickly and have those savings on each item sold.
Yeah, and like you said, it's something you can grow into. So it's not like it's all or nothing. You either aren't going to sell in Europe if you're not pan-European. You can, there's so many a la carte options. And that's the one thing I love is, and hopefully for folks, this is now starting to be a little bit more, or a little less scary, I should probably say. I was going to say more clear, but less scary. Because I think that's the one thing for a lot of, you know, folks is like, when you're just not used to something, it's like, oh my gosh, I don't want to do it. So real quick, we've got a couple of comments from folks. Are both of you okay time-wise? If not, let me know. And okay, cool. Awesome. So if you have any questions or comments, please feel free to drop them in. We've got Thanasis, congratulations for this webinar. It's very helpful to e-commerce sellers. The information you're sharing is very important. Keep doing great work, Avask. So thank you, Thanasis. Great stuff here. And then we've got Julia, who is one of your colleagues. She's very nice. You guys are doing great. Thank you, Kevin, for having Cambridge and Tom on your live session. Thank you for the great information you're sharing. So yeah, this has been a lot of very helpful stuff here. So, you know, really what it comes down to is, when you're thinking about going into another country, you don't have to feel like you have to DIY it all. So, another one here. Thank you, Cambridge, Kevin, and Tom. Am I missing anybody here? No, I'm looking on the other screen too, just to make sure I'm not missing anybody. Because at the end of the day, you don't have to do this all alone. So if it sounds interesting, like, oh, I'd like to go into another marketplace, well, do it. Because, you know, when you first start out, you're trying to figure out the product by yourself. You're trying to figure out, you know, how do I write the listing? How do I do all these things? And you tend to DIY everything by yourself, because oftentimes when you first start out, you have more time than you have money. But then over time, your time becomes more valuable than the money that you might spend to outsource things. So keep that in mind. It's not like when you're trying to decide, do I need to register, in my example, with the Florida Department of Revenue for sales tax, which you can't get around it in Florida if you live in Florida. But the thing of it is, it gets a little more complex in some regards, because it's different when you're looking at Europe. But actually, as we were talking about, there's actually things that are less complicated. So some of it is just clarity and understanding, and pick up the phone. So how would folks get a hold of y'all?
So they can obviously contact either of us.
Okay.
So my email is tom.meek@avaskgroup.com and Cambridge.
Mine's cambridge.lyford@avastgroup.com. We have a UK-based phone number plus a selection for other countries as well, so that you don't have to pay the tolls. That's 02380 600 120 for the UK-based number, and I'm sure we can send out some materials with some of the other ones on there as well, so you don't have to pay those tolls. I would say for an information hub as well, we've got a great website that we created to consolidate all new updates. It's called the globalexpanders.com. So please go and sign up for that. That's an excellent hub of information, new updates constantly, webinars and etc. on there. So please do use that as well. And obviously, Kevin creates great materials as well for expanding. So you've got a great hub of information on both sides.
Yeah.
Yes. Good deal. Well, I created avaskgroup.com anticipating that was what you're going to say. So avaskgroup.com is the right
go-to one. Yeah, that's the first one. If
Good.
you get in contact with us, but for information, 100% recommend Global Expanders.
Global Expanders or the Global Expanders?
Globalexpanders.com.
Globalexpanders.com. So let me make one for that too. Global Expanders.
We're always adding resources to Global Expanders as well, so that's going to be a great one for people to review. We recently did a full webinar series on different aspects of expansion into new markets, sourcing, advertising, payments, the full lot. So there's some great stuff for people to review if you are an Avask client. And I would say just sort of from a summary side, it really has never been as easy to expand into the EU. I would say that use Amazon FBA to kickstart. Yes, there's a number of different marketplaces, but Amazon really is very easy. Once you've done your market research and you've got that business plan as to how to expand, speak to the experts in each of those areas of shipping and VAT. I'd say they're sort of the main two that you want to really get to grips with at the start and get that business plan in place. Once you've got that, it's very easy to launch. Why would you close the opportunity of selling just in the US when, as a combined population in Europe, you've got an even bigger audience to sell your products to? So don't be scared by what the requirements are. It's a very small checklist, and once you've got them all ticked, your revenue stream is humongous. So get in contact with us, and we'll be happy to sort of put that plan in place for you.
Yeah, and I'll echo that. Basically, once you're up and running, the scary part is the hoops you got to jump through in the front end. But like anything, once you've done it and you're comfortable with it, it's simpler, because you're going to find it's going to be a lot simpler to expand into the UK and Europe than it is to try to figure out eBay and Etsy and Walmart.com, which I think are great, and you should do all of those. But you're probably going to end up, in most cases, I can't guarantee anything, but in a lot of people's cases, you're going to end up having better results in Europe than you are going to have with non-Amazon marketplaces, even in the US. So just folks, keep that in mind. And I probably should have made this a little clearer in the front end. So not only is Avask a sponsor of the Global Empire Summit that I'm hosting, but the reason I even know the folks at Avask is because they do my taxes. So they've been doing my taxes for a couple of years now. Oh, and one tax thing I meant to ask earlier. So what happens with the profit? So do I have to do a tax return with Hmrc if I'm based in the US and have a US company?
No. So if you're the only point where you'd have to declare additional taxes to Hmrc would be if you're incorporated in the UK. If you're an overseas company, obviously VAT would be the only thing that you really declare to Hmrc.
Right. But don't forget your Uncle Sam, if you're in the US, he wants his money and he's not very forgiving. So make sure your accountant knows about your sales and profits from the UK. But Amazon actually makes it very simple. They give a 1099 form, which is basically the form they give you at the end of the year with your sales. And it's converted into US dollars. And if your accountant can't handle some costs that are in pounds, you have the wrong accountant. It's 6th grade level math to figure out the difference. I'll just throw that out there. And it's not like your CPA in the US is having to figure out your VAT returns. You have the folks that are the experts to do it, because if you needed to get glasses, you wouldn't go to your dentist. You know what I mean? So they both have doctor titles, but go to the actual doctor who does the thing you need. So it's the same with taxes. Go to the tax people to do the thing you need. So in this case, it's the folks at Avask. They do a great job. And, at minimum, go to globalexpanders.com and check out some of the resources they have there. And I want to thank you both for being part of the summit. And this has been phenomenal information here. And I don't know why I enjoy geeking out on Vat stuff, but I'm one of those weird Americans that actually kind of enjoys the puzzle of it. So anyway, thanks so much.
Thank you for having us, Kevin. And I hope we've at least helped one person on their journey into expanding into Europe, if not multiple people, because it'd be great to, see you not leave that money on the table.
Exactly. And that's what you don't want to do is miss out on the sales and the profits and the cash flow that you would be getting if you're not selling your products over there. So,
Exactly.
So yes,
Awesome.
Thank you very much. And
thank you, Kevin.
Thanks.
Speak soon. Bye-bye.